Dave O'Hara, about Redlands Realty and Loan. We bring you these short segments every couple of weeks in order to talk about mortgage and real estate, upcoming things and what has happened, and things that might lend information to the industry. If you like the information, please feel free to snap the click on the thumbs up button in the bottom. That helps us quite a bit. So, firstly, in an opinion piece that I was reading about millennials moving back home, a couple of reasons. One, lack of work. Probably not as often as the fact that they can work remotely. And so they're moving out of the hustle bustle of where they are close to work and moving back home where it's nice and comfortable, everything's there. And that to me is what I see happening in reference to this multi-generational housing that's developing, which goes to talking about the ADUs, or accessory development units, that have been allowed for a couple of years now in California, that in a single family residence zoned area, you can build a casita or a guest house, which is another separate full living quarters on the same property. Really a great idea, definitely less expensive than building a brand new house from scratch on raw dirt. In any case, California's OUTmigration, which I didn't even know that was a word, but apparently it is. So people, nearly 700,000 are moving out of California, or have, which is higher than the 500,000 that are moving in. 283,000 of those people moving in are moving in from other nations, whether they're moving in legally or illegally. These numbers come from the 2020 U.S. Census, which will also speak to the amount of congressional seats that will be available, because that's obviously supported by population. So just an interesting little twist on that. So we received an email that I wanted to chat with you about briefly. It goes back to part of our conversation about affordability and home prices, and the emails seem to go into mostly what I would define as price point. So if you're buying a house at $400,000, is that really a good price point for return on investment? That's a lot of money to owe. That's a big down payment for an investor. Okay, so if it's price point you're concerned with, then certainly find a lower price point area. Michael, for instance, bought a 3-unit property for under $200,000 that cash flows the day he closes. So he writes no principal, interest, tax, and insurance check for that property. His rents pay the full mortgage payment. But if you can't find the property you're looking for at that price point in California, perhaps look outside of California. Midwest is very affordable. Rents are very solid, and that might be a place to look for your property. Which also lends me to talk to you about the different loans that are available, which is very interesting, but you wouldn't probably run into these just in conversation. And that is firstly, 24-month business or personal bank statements, where we put together, add up all your deposits for 24 months, divide it by 24, and that is the income you're awarded in order to make your PITI payment and calculate your debt to income ratio. Nextly is investor cash flow. A lot like commercial loans, there's for residential as well. So investors can buy a piece of property, they write a check for the down payment, but then the rents go one for one towards the payment. And if it cash flows, then you get the loan. Very interesting, very popular. Not a lot of brokers are offering that, but certainly available here. Also, asset depletion. If there's a lump sum of cash that you could draw X amount from in order to make payments on debts, and you have enough that it would continue to pay you for 3 or more years, that's income as well. Asset depletion. And lastly, reverse mortgage. I like to refer to them as retirement mortgage. Because this is a fantastic loan that you wouldn't have to make a payment on if you're 62 years or older and your primary residence. This is one that's wildly misunderstood, in that a lot of people think that you're selling the home to the bank, and or it goes to the bank on the passing of the homeowner, which is simply not true. These are non-recourse loans. The property can never owe more than the property is worth. It's an FHA HUD guaranteed mortgage, and there's several different types, whether it's paying you every month or it gives you a lump sum at the beginning and in 12 months, or you're making small pay, whatever. There's a lot of different ways to look at it, fixed and adjustable. But I love those loans, and if you have questions on them, feel free to give me a call. All right. So that's it for today. I'm Dave O'Hara, about Redlands Realty and Loan. If you appreciate this, then please feel free to like, share, and subscribe. And thanks for watching. I'll see you in a few weeks.